Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Hello nieces and nephews, welcome back to Uncle Charles' YouTube channel. Today we got a little bit of a bounce, alright? A little bit of a relief bounce, getting SPY's RSI out of the oversold territory. Got ourselves an inside candle setup, which usually is a sign of consolidation. Not too surprising to see because we do have CPI this Wednesday and then PPI on Thursday. Big data. That the CPI, as you guys know, causes a big move to happen. Okay, so big money could be waiting for something like that to happen before we get, before market makers reveal the big move to us. So just keep an open mind to a possible consolidation until then. I'm hoping that's not the case. As far as the price action though, we did kind of back tested the breakdown level. I had a fib level on 548. I had a level at 550. Of course, the 50 DMA was at 549. Good to see. It is healthy to see after getting a breakdown of a critical level. It is technically healthy to see it get back tested to see if we get the roll change. You guys recall when we had that 555 level back in mid-August to late August. 555 bounced multiple times, as you guys can see, until it didn't when we broke it down, and then that area back tested it as a resistance. That's a roll change when support turns to resistance. Today we kind of got some selling pressure around that area, so technically the price action is still overall bearish. Okay, it's bearish until it isn't. And when will it be bearish? When will it be bullish? When we recapture the 50 DMA, clear 550. And to really call a bottom, I need to see 555 recapture. Okay, that's my bull case scenario. Otherwise, it's still overall bearish. Like I said, consolidation type of day. We got that big support level around 540. It is a big level. It's one of my support level, but also the dark pool orders came in at 540. The majority of it, billions of dollars in premium, 540. Once again, the market makers are set in the range here, and we know that it was buying pressure around 540 last week, and there was dark pool orders around that level last week, and today there's still dark pool orders around there as well. So if we are going to get more downside, well, first of all, we recaptured the fib level 544, so that's not a good sign for bears. Gotta break that down to give us a dead cat bounce. If it is a dead cat bounce, right, support at 546 and the fib level at 544 needs to break down because we recaptured that. So we need a dead cat bounce setup, and if it does, I would then favor 540 being tested. And because it's also a dark pool level, Uncle would be very bearish and favor a lot more downside, possibly down to 531-ish if we break down that level. That's the price action plan for SPY. Triple Q consolidating as well. We got the fib level at 456. Did not recapture that today. Did find some selling pressure there. Okay, so for this bounce to continue, 456 and 458 needs to clear to put 460 plus in play. I think we could make it all the way back up to 464 possible, but we need to clear 456 and 458. For this to be a dead cat bounce, we need to break down some support levels. 452 and 450 needs to drop and break down. It served that support today, but if it can break down, definitely would be bearish. 447.5, possibly all the way down to 443 would definitely be a possibility. NVDA, a consolidation day as well. It did recapture the 106 fib level. As long as above it would be bullish, but it needed clear some more resistant levels. I have 107.5, 109, and 111 as the next resistant levels. If they clear, more upside is possible. 112.5 or higher, 114, 115.7 would be targets to the upside. Do have an inside candle setup, guys. Mother candles ranges around 108, so keep that in mind. Now, to be bearish, we got to break back below 106, break back below 104. If we do, 101 would be tested, but I think 101 would break down on the next test. Should setting us down to 99 and 97.5-ish area. All right, Tesla inside candle setup, but we had this big old sell-off from last Friday. Range is pretty high, But one thing to notice is that we did close above the 216 level, which is a fib level. So as long as above 216, more upside is possible. 217.5 and 219 must clear to put 220.5, 222, 223.5, and 225 all in play. We should get bearish if we break back below 216, because that's the level that recaptured today. So if we break it back below it, that will be a dead cat bounce setup. Bearish with 214, 212, possibly 210 in play, and below 210 would be very bearish. Bears would resume control below 210. All right. IWM still battling around the 207.4 support level. That is a fib level. Once again, there's some buying pressure around that area, keyword area. Still need that daily chart close below for me to favor more downside. 204, and of course the 200 daily moving average all the way around 202.4ish currently would definitely be in play, but it got to break down 207.4. Okay, it did defend as support, but it didn't really clear or recapture any critical levels. I still need to see 210 and 211.88 clear. Okay, if they do, I would favor more upside. 213, 215, and 216.7 would all be back in play. I would only call a bottom if we can get back above 216.7. All right, let's get to the dark pool levels. 540, 78% of activity came at 540. Once again, the market makers are getting busy around that 540 level. I think that's the low right now. That's the bottom for now, temporary bottom, and it is the level that needs to break down if the bears want more downside. That's where the big money players are getting active. Triple Q, 80% of activity coming in at 448.76. All right, 448.76. We're well above it today. So just keep that level in mind. IWM 207.7. Yeah, we're a little bit above that today. I do have a support around 207.4ish, but that's where big money players are getting busy. 207.7. Tesla 216.27. Uncle has a fib level at 216ish, so very close to my level. Below 216 would definitely be bearish. That just adds to my conviction right there, guys. NVDA 106.4. I do have a support around 106, but that's where the big money players are getting active. 106.4, guys. Keep that in mind. Now let's get to the flows. I know you guys like the flows. Let me show you guys my filters. 100K premiums or above, because I want to know what the big money players are doing. I'm going to look at all expiration dates. I'm only going to look at above the ask, because I'm looking for the most aggressive moves. I will only get for sweeps and out the money, the highest conviction plays. And look at that, back to being bearish, guys. Last week it was bullish and we did get a gap up. We did get like what, about an $8 bounce, but today it is bearish. I'm telling you guys, it's very worth having this data on hand. Okay, you can look at it in real time. You don't have to wait for my YouTube channel or anybody's YouTube channel. You get this, you'll be able to have this information. It's so helpful. Combine it with price action is great. Anyways, let's take a look at the context here. Bearish, a higher quantity and bigger money going into puts. $5.4 million going into puts. Only $2.2 million going into calls for today. Here you got October 18th expiration date, guys. 520. Holy moly, donut shop. They entered around 546.7. 520. What's today's date? September 9th. We got a bunch of some puts here for tomorrow expiration day. We got a call here. I don't really care about these short-term ones. September 10th, I don't care. Now September 30th. We got a 530 strike price for September 30th. Y'all see what big money's doing, right? Y'all see? Wait, hold up. Hold up. Oh, I got it at 25K. I'm so sorry, guys. Let me get it at 100K. There we go. Now Uncle has at 100K. Why I got it at 25K? Okay, so overall still bearish, though. $1.4 million in the puts, 648,000 in the calls. So bears are still much more aggressive. And still, we still got that October 18th 520 strike price. Okay, that's over 260K right there. Okay, that's a lot. I don't care about September 9th. And look at this. March 21st, 495 strike price. Okay, do these people know something we don't know? Now, here's what's messing me up a bit here. Because while we have this 520 strike price for October 18, we got this person here coming at 555 strike price October 18. These are calls. These are calls. Holy moly. September 20th, 525 strike price. This is interesting one because it's more shorter term. And somebody's short for the shorter term. Very bearish. September 11th, a couple of days out, 540 strike price. September 20th, 540 strike price. So we still have a lot more people bearish compared to being bullish as far as what the big money players are doing. Now, we don't know why they're doing this. I'm just reporting to you guys what they are doing. We don't know why, but that's what they're doing. More big money going in for puts, guys. Triple Q, same situation here. Look at this, $2.6 million going into puts. Aggressive puts. You guys seen my filters. And only 799.5 thousand going into calls. That's lopsided there if you ask me. But let's take a look at the context. So we have September 9th, that don't count. September 30th, I count that, 440 strike price. We got some calls expiring for tomorrow. What are they expecting, a bounce? Maybe we get a bounce for tomorrow. I don't know. Maybe they bought this around 11:07 this morning. Keep that in mind. So maybe they took profits already. So I don't know if you guys want to count that. Even this call is September 9th, so I wouldn't count that. This one's September 11th, 450 strike price. So that's all right. September 9th, nope. September 10th, nope. September 30th, I'll count that, 440 strike price. You guys see that? That's a big move to the downside. Big money is still betting to the downside more than they're betting to the upside. NVDA is bullish though. NVDA is bullish. Let's take a look at the context. We got a 110 strike for September 13th, a few days away. We got a 104 strike for September 13th as well. So we got mix here, but as far as the premium size, this is the puts are bigger money, over 227K, but the calls 119K. So the bears putting more money on the line there. September 13th as well for 104 strike price. September 13th for 100 strike price. And we do have some calls September 13th, all of them for 110 strike price. And then for the calls for September 20th is 107 strike price. Not very aggressive if you ask me. This is very mixed. So I don't think this is very helpful. Even big money for NVDA, they don't seem to be very decisive. Tesla, what the hell? Okay, wow, $3.5 million went into calls today. Did Tesla even bounce? It bounced just a little bit. What the hell? 100%. All the aggressive plays, $3.5 million going into calls. Okay, well, this is for a few days out. All 220, 220, 220, 2.5. All these people's all bullish for after CPI. They're all bullish for after CPI. September 20th, 220 strike price. Y'all see this, $3.5 million. I mean, does it look like hedges? I mean, just a few days out. These are sweeps. These are aggressive plays. These are above the ask. They're bullish, guys. Did we get everything? IWM, the one aggressive play they have was a put for December 20th, 195 strike price. Wow. So again, guys, I'm trying to look at the most aggressive plays. You know what I mean? 100K premium or above, all deltas, above the ask. We're looking at the sweeps and only out the money. Y'all see what they're giving us, okay? Y'all see what they're giving us. And I just want to say, I give it all to you guys for free. I love you guys. I thank you guys for being here. Please subscribe to my channel, okay? Please subscribe. I appreciate you. Peace.